Eric Muadit, Muadit.com, with the weekend world market analysis for the weekend of June 27th, June 28th, 2015. Let's begin here by taking a look at the US market, which about 2 hours to go. And we look like we are trading lower slightly in terms of the NASDAQ. Otherwise, the Dow and the S&P 500 slightly unchanged for the day. All right, so let's take a look at how world markets closed on Friday. We begin by taking a look at Asia. Of course, the biggest news overnight was this 7.38% drop in China. And also we see that their technology heavy index was down almost 8%. I mean, that's a huge drop for an index. And we see that Hong Kong was down about 2%. We see that the KOSPI was also pretty much unchanged, and we see that Japan was slightly down. Let's take a look at Europe, and we can see pretty much the biggest mover on the major averages in Europe was London, which was down about 0.79. We see that the DAX and the French CAC were slightly to the positive. Take a look here at how the Americas are trading. I think Brazil was called higher last time I checked. Yes, up 1% for the day, and the other markets pretty much all over the place, mixed. All right, let's go to the charts. Before we take a look at world markets, I guess we can take a look at the US, which is part of the world if you think about it. Anyway, all right, so we see that the NASDAQ down the most for the day. Why? Because its daily RSI is moving below 50, so that makes sense. And now we see that it is coming back to test the 50-day moving average. If it holds, that's good. Remember, it's been holding the 50 throughout 2015. All this here, we can call them bounce at the 50 level. And here's another test of the 50-day moving average. If it holds, well, market continues to be okay. If you take a look at the daily for the NASDAQ, draw a line connecting recent RSI lows, and you can see that it is coming back to test that line right there. If it holds and bounces on that line, expect the market to be trending higher. So that's the daily for the NASDAQ. If we take a look at the weekly, we can see that as of right now, before we close, there's here reason to think that if this continues being the case, the market is failing to hold above the previous weekly closing high of 5,092.09. So if it stays below that, that's a failed breakout. We also see that the weekly RSI is showing resistance, coming back and testing the line connecting recent weekly RSI highs. So the weekly, if it continues to show this resistance, one can expect a week-to-week correction as far as the NASDAQ is concerned. Otherwise, for this to change and give us a breakout, we need the market to move above that declining RSI resistance line, and also we need the market to defend that 5,092 level. So right now, depending on how we close for the week, we could be looking at a failed weekly breakout, or the market could recover by the close. But for now, it looks like we are setting up for a net down day as far as the NASDAQ. And again, go back to the daily. For today, more than likely, I don't see how the market recovers on a day-to-day basis. Why? Because we clearly see that the RSI is moving below 50. On the days where we have the RSI moving below 50, we have a big drop on whatever index is moving below 50. Let's take a look at the Canadian market, which is having a slight positive gain for the week. Right now, about 0.94% higher before the end of the week. We see that it is holding this line where it's been bouncing over the last couple of years on the weekly. As you can see, this is where it's been coming back and showing some short-term support. When the weekly RSI holds on this line, we get a multi-week rally as far as the Canadian market is concerned, and we see it holding there. So we can say week to week, that is good for those who are looking for reasons to stay bullish. If we take a look at the daily, we are showing resistance now around this declining 200-day moving average. So we have a 200-day moving average that is coiling down, which is not good. We have a 50-day moving average that is also coiling down. Not the best setup, especially the fact that we are trading below two downward trending and downward sloping moving averages, I don't think that's a good sign, even though we can see that we've been stuck in this range over the last month and a half. Take a look at the daily, and we can see here, if we draw this line connecting the previous support levels, and even here, but now it seems like this has become resistance on a backtest failure. Resistance there over the last couple of days, which is the reason why we are pulling back today or on Friday, and also we see this resistance was during this high. So yes, we can see that this could actually be a market that is slowly rolling over to the downside. Actually, if we go back to the weekly, one thing I failed to mention on the weekly is the fact that we seem to be showing resistance at the 10-week moving average, which is a problem. Markets tend to trade well and trend higher whenever they are trading above the 10-week moving average or the 13-week moving average. So either you can use 13-week moving average or the 10-week moving average for a trend gauge, and here we see that the markets are trading below those two moving averages on the weekly. Indication is that this market is not as strong, and the daily does confirm that. If we take a look at the Brazilian market, which is up today, we can see that it is still stuck in a range trying to find support, but trading between the 50-day moving average and the 200-day moving average, generally speaking, which is why it's been stuck in this range here. It's because it's moving and trading between those two moving averages, no conviction on either way. Eventually we have to get out of that range for a swing trade, at least for us to see a swing trade direction. Right now, in my opinion, sideways action trading between the 50-day moving average and the 200-day moving average, just a lot of indecision here, which is why the market is sideways. Let's take a look at some European markets. We begin by taking a look at the French market, and we see here it's come to the 50-day moving average, seems to be resistance. It had failed to hold above the 50 a couple of weeks ago around here and dropped. This is becoming resistance again. We seem to be seeing this on many markets where the 50-day moving average is now acting as resistance. There's also a line connecting the previous RSI highs like that. Ever since we broke through that line, we came off the highs there. We hit that level once, end of May, which was the high there. And now over the last couple of days, we've hit that level. If we continue showing resistance on this line, indication there is that this market should be due for a pullback. The one thing I did note is that if you take a look at the French market from a monthly view, we see that on the monthly, it could easily break out above the recent monthly closing high. So there's something to keep an eye there. The level to watch there for momentum to the upside is if it can move above 5046.49. If it can move above that level, that would suggest that RSI is also holding firmly above 69.10. If the RSI can hold above 69.10 and break out in price, that would suggest that the market is actually not as bad as it might seem on other time frames, and that the monthly is strong. So right now we haven't broken out above 40.49, so it's tough to tell which way it wants to go. Quick look at the weekly for the French market. We can see that we finally managed to recapture the level above the 50-day moving average, which is a good sign of recovery. We also bounced. As you can see, there was a breakout somewhere here above the 50 on the weekly RSI, which began this nice move. This breakout there correspond with this price breakout. So nice entry there, nice entry on the RSI. We've come back and we've successfully tested the 50 level and held. So on the weekly looks okay, but you can see that this is also coming back to a topside resistance on the weekly time frame. So lots of things to consider here. Net result to me is that short term seems to be resistance on a day-to-day basis. Weekly looks okay. Monthly could break out if it can hold above that 50.49 level. If we take a look at the German market, we see again resistance at the 50 about 2 months ago, and we also see resistance around the 50 again here. The 50 is coiling down, which might be indicating where prices want to go. We also see that on the RSI, the level where this market has been stalling is right on this level here. Ever since the break of that level recently, which brought us off the highs, market's been finding it difficult to move above that line, which was this short-term highs. And again, recently we hit that level and we are pulling back. So as long as that's the case, my thinking here is that more than likely this is resistance until such a time where we can break out above that obvious line of resistance, which is this level here. Until we break out above that level, one can assume that this market should continue being in a pullback mode. If we take a look at the FTSE London market on the daily, we can see that recently it came back to this declining line of resistance on the daily RSI, or the last couple of days. It hit that level, which is also resistance around the 50-day level on the daily RSI. So that's not good. Keep in mind that this was the break short term, so we broke down here, and not to confuse anybody, we broke down there on the RSI, which is this break in price, happens to be also trend break there. So once we broke that trend, we broke the same trend on the RSI like that, and since then we have been unable to move above that line there. So that's the reason why I think this is on a pullback mode. We are back trading around the 200-day moving average, but we also have a declining and downward sloping 50-day moving average. Net result is that this market could easily be trading lower. Now, on the flip side, every time we seem to be pulling back, market's been coming back to an obvious level of support and finding support. So we seem to be stuck in this range of support every time we go down, but every slight move higher recently has been met with the resistance, as you can see here. So it seems to be potentially a level where we can expect some type of sideways action around this recent trading range. So now we take a look at some Asian markets. Begin by taking a look at the biggest mover overnight, which was China, down 7%. And this is Friday's chart, or the close of Friday's session in China. Number one, we closed Friday exactly around the 50-day moving average. All right. We have also Friday's trade ended exactly on this line, which was either support. Now what's interesting is this line is where it's been bouncing. It bounced on this level once, which is here, bounced on that same line here during this pullback, bounced here recently beginning of May, which is this low, and now was trying to find support. But what is curious here is the way it closed on Thursday. As you can see, it was rejected and closed with the resistance on this line. So maybe that is, on hindsight, short-term tell of where the market was wanting to go on Friday. And also we see that this level has been support. In fact, let me draw that on a clean chart, so give me a second. And so this is a 1-year daily chart for Chinese market, and if you take the lows, these two lows, and connect with this low, you get an interesting data point. Let me show that to you and extend it something like that. You can see that this back test, or this failure to recapture above this line of support, is probably one of the reasons from a technical standpoint why the market eventually had that big drop. Of course, that's not the only reason, but you can see technically it failed to recapture that line of support, and now we have this drop. Market did end the day on Friday somewhere around here. It's a big one-day drop. I mean, 7% drop for a major market, that's huge. Okay, so right now looks like it's asking lots of questions. And also if we take a look at the weekly, we can see that the weekly is now below 69.10 after staying above 69.10 over the last couple of months, going back to September of last year. Generally been staying above 69.1, which is this very strong bullish phase. But now we are trading below that 69.1 level, suggesting this could easily now be opening the chance for this market to trade at a substantially lower level. As far as the monthly is concerned, the key here is what happens if it can still hold above 69.1. So the key is whether it holds above 69.1 on the monthly. If it defends that level, then even this pullback on Friday of 7% is going to be nothing. But if it cracks back below and trades below 69.1 on the monthly, then that's when we know that this is probably now the end of this massive move. In fact, reason why I say that is if you take a look at the long-term monthly view, the last time we had a major move in the Chinese market was during this phase here, just before the Olympics in 2008. So this move with a breakout from here to here only ended after the RSI moved back below 69.10, which is somewhere here. So really it depends on whether it can stay above 69.1 on the monthly. If it does, then this market should continue being strong despite that big drop on Friday. If we take a look at the South Korean market, again another major market trading between the 50 and the 200-day moving average. Sideways action pretty much. Also we see that the recent break is being tested and we seem to be failing. So we broke below this RSI support line here, which was the high there, and then you draw a line from there like that. So this became resistance recently with a double top. Hope that makes sense, which is here. And then another recent break there, draw a line like that, and you can see that this is becoming resistance. So short term looks like sideways action to down, in my opinion, as far as the South Korean market is concerned. If we take a look at Hong Kong, again, seems like the 50-day moving average is becoming resistance. Seems to be the theme all over the place. So resistance around the 50, not a good sign short term. And we also see that the recent break in the RSI, this break in the RSI on the daily, pulled us off the high here. And if we draw a line from there like that, we can see this has become resistance again. So short term, lots of reasons to be sideways to down also as far as Hong Kong is concerned. If we take a look at Japan on the daily, we can see that it's been making higher highs over the last couple of months, higher highs here. But every time it makes a new high, it's been making that on declining RSI strength. And we see that this has become resistance. Sometimes whenever you see this negative divergence, that is just sometimes the excuse to take markets lower. So, that shows that yes, it might be on a pullback mode. How much lower it can go, who knows? But for now, definitely looks like it is showing resistance on this line, which is probably one of the reasons why it was down on Friday. On the weekly, the level to watch is 20,563, which is this recent weekly closing high. As long as it can stay above that, it should be bullish. And also as long as it can stay above 69.1 on the weekly. Now if it breaks below this recent weekly closing high, so if it drops back below that 2,500 level, that's going to be a failed breakout, which might suggest lower prices. And also if the RSI fails to hold above 69.1, that would also suggest lower prices are in play. For now, it is still trading above 20,563. So let's keep the benefit of the doubt to the upside, even though we see that daily resistance on the RSI. So anyway, in conclusion, as far as Japan is concerned, it seems to me, like to be okay. It's okay until, for example, the monthly is below that breakout level of 2,500, and if the RSI moves below 69.1. A quick look at the Australian market. And we see here resistance at the 50-day moving average, which is declining, resistance at the 50-day moving average, which is declining. And recently this week, at the highs of the week, we hit that declining 50-day moving average, and now we are pointing down, which is not good in terms of where momentum is looking to go. And we also see that it is coming back to a level where it has been struggling. So this line has been where it has been seeing short-term resistance. As you can see, resistance on the line there gave you that high, which is the actual high. Double top resistance here gave you this recent high here, and over the last couple of days resistance there, which is also this high. So lots of reasons why this market is struggling. For now, we have to see it move back above the 50-day moving average to get some confidence. This one looks like it is also net looking to point down in terms of direction and momentum. If we take a look at the Indian market by way of the Nifty, we can see that off the highs here, this is where the RSI broke down. Somewhere there was a break there in the RSI. So this RSI break, and draw a line from here somewhere around there, and you can see that this has been resistance once before. Resistance there on the line, that was the high and a pullback. We came close to that line there twice and failed, which was the high there, and now we seem to be forming a double top on the daily, suggesting day to day the Indian market should also be looking to go down on a day-to-day basis. If you take a look at the weekly for the Nifty, we closed slightly above 50. Problem there is that if we crack back below 50 in the coming week, that would suggest a reversal on a week-to-week basis. Also, it needs to hold back and stay above the 10-week moving average if it is going to recover. So it is kind of like, let's call it sideways action again. Trading around all these moving averages just means sideways action. Above the 10-week moving average, that's good. Above the 13-week moving average, that's good. Otherwise, if it moves back below those moving averages, that's going to be really not a good sign. Also, let's see what happens around the 50 level on the weekly RSI. Anything that keeps it above 50 is good. As you can see, it's been bouncing back above 50 and having a good trend to the upside over the last couple of years. Even this slight recovery led to a couple weeks higher. So either 50 is support for a nice move higher, or resistance for a move lower. So just watch that 50 level. Above 50 you can be bullish. Below 50 maybe this market is changing and looking to go lower. Let's take a look at one more market here in the South African market, which is also showing resistance at the 50-day moving average. Boy, have we seen this all over the place, which might be indicating where markets want to go generally worldwide, which is lower. This resistance at a declining 50-day moving average also corresponds with a break of the RSI. Let me show you right there. So that break, draw a line. This is also showing resistance. So really net, it seems to me, if I was to be neutral and to decide which way world markets are poised, I would say sideways to down. Eric Muade with Muade.com. As always, good luck, peace, and blessings. Woo! E-A-C-S. You still here? Have a good weekend. I am out.